Everyone always says, wait until the age of 70 so you can collect the biggest Social Security check. They preach patience. They preach delayed gratification. But here's the brutal truth. The financial industry doesn't want you to calculate. For 2/3 of Americans, waiting until 70 is the most expensive mistake you can make. They're lying to you with bad math. We're going to show you 7 smart, fact-based reasons why filing at 62 doesn't just put more total money in your pocket. It buys back years of your best life. You need to look closely at your personal break-even age, not the national average. Stay with me, because waiting could cost you thousands. And your health. Now let's look at the break-even math that everybody talks about, but few people actually understand. The problem is, these calculations assume you'll live exactly to the average life expectancy and ignores everything else, like taxes, health problems, or needing money for senior emergencies. That's why relying only on the calculator is the first mistake. Here is the truth about the average. Imagine you have $300,000 in retirement savings, and let's say you need $4,000 a month to live comfortably. In scenario A, you delay Social Security. You'll need to draw the full $4,000 a month from your retirement accounts for 8 years until age 70. That's $384,000 withdrawn, more than your entire account. In scenario B, you take Social Security at 62. You're only pulling $2,000 a month from your savings to supplement the $2,000 from Social Security. Over 8 years, that's just $192,000 withdrawn. Half as much. This is the financial punchline. If your accounts are earning just 6 to 7% return, this strategy could leave you $100,000 or more extra in your account by age 70. You thought you were gaining money by waiting, but you were actually losing the compounding power of your investments. If you file at 62 instead of 70, you'll stay ahead until age 81. The problem is, if your health or family history suggests you won't reach 81, then waiting actually is the biggest gamble. Every month you wait past 62 is a month you're gambling with your own mortality. That's why we need to look at your actual personal situation, not just the calculator. You need to know the facts to stop this gamble. Here are the 7 smart reasons why waiting could cost you thousands. Let's jump into the first financial pillar, the spousal theft.
You need to know the facts to stop this gamble. Here are the 7 smart reasons why waiting could cost you thousands. Let's jump into the first financial pillar, the spousal theft. 1. The spousal theft, $48,000 loss. This is the biggest, most silent cost of delaying. The spousal theft. The Social Security system has a cruel rule. Your spouse is locked out of receiving their full spousal benefit until you file first. It doesn't matter how old they are or how long they've waited. They are held hostage by your decision. Imagine your benefit at 62 is $1,200 a month. Once you file, your spouse gets 50% of your full retirement benefit, significantly boosting their household income. If you wait 5 years to file, you don't just lose your own benefits, you cost your spouse up to $48,000 in spousal benefits you can never get back. Waiting doesn't just delay your money, it delays theirs, too. This is about teamwork and protecting your entire household's immediate cash flow, not just your check. 2. The mortality gamble, health and longevity. Let's get painfully real. This is the mortality gamble. You need to live to 76 to break even between filing at 62 versus 67. You need to live to 81 to break even against 70. If family history, health issues, or medical science suggests that you won't reach your 80s, waiting is actually the risky choice. Every month you wait past 62 is a month you're gambling with your own mortality. You paid into this system for decades. If your doctor or your gut tells you those break-even ages are optimistic, then collecting money now is a tactical retreat, not a sign of defeat. It's smart financial planning based on the single most important asset you have, your health. 3. The tax time warp. Strategic tax timing. Let's talk about the tax time warp. The bigger check you wait for at 70 might be completely eaten up by taxes. Social Security benefits aren't automatically taxed. It depends entirely on your other income. If you file now at 62 while your income is low, your Social Security might be completely tax-free. But if you wait until 70, your investments have grown and your 401k required distributions kick in. Suddenly, up to 85% of your bigger benefit could become taxable. You waited 8 years for a bigger check, only to keep less money after taxes. Sometimes, the smaller benefit that's tax-free is worth more than the bigger benefit that gets eaten up by the IRS later on. 4. Bridge to a bigger spousal benefit. This is a powerful, little-known strategy. If you work part-time and your own Social Security benefit is low, say $800 a month, filing early can act as a bridge. You start collecting your lower $800 a month at age 62 and providing immediate household cash flow. When your spouse files at 67, Social Security automatically switches you to the spousal benefit. This is 50% of your spouse's benefit, which is often much higher. For example, $1,200 a month. You're essentially getting two income streams over time, a lower benefit now, and then stepping up to something much bigger later. If you waited until 67 to file anything, you would have missed out on that $48,000 completely. 5. Securing higher survivor benefits. The final protection. Securing the survivor benefit. When your spouse passes away, you can inherit their entire Social Security benefit if it's bigger than yours. Imagine you're eligible for $800 a month at 62, but your spouse will get $2,400 a month. By filing for your benefit now, you start collecting immediately. Your spouse can wait, letting their benefit grow to the maximum. If your spouse unfortunately passes away, Social Security allows you to step up to 100% of their benefit. Your $800 a month payment suddenly becomes $2,400 a month for the rest of your life. This is planning for certainty, not chance. 6. Funding your go-go years, the ultimate benefit. Retirement has 3 phases: go-go, slow-go, and no-go. The go-go years, your early to mid-60s, are when you have the health, the energy, and the clarity to actually travel, explore hobbies, and be active. Filing early gives you more cash while you can fully enjoy it. Would you prefer claiming bigger checks later on when you can't even enjoy them? Or would you rather enjoy it now when you have the energy to do so? Use the money to buy freedom, peace of mind, and meaningful years while you still have the energy to enjoy them. 7. The need for income and side hustle. Strategy. Sometimes the math doesn't matter. Life does. Bills, medical costs, helping family. You simply need the money. Social Security is an insurance program that you paid into for decades. If you need it, there's no penalty for using it when it makes the biggest difference in your life. Furthermore, if you file at 62 and have a small side hustle that earns just under the income limit, you can stack the benefits. As long as you earn less than the earnings limit, you don't lose a penny of your Social Security benefit. That means you can consult, freelance, or do part-time work on your own terms. That's what I call sustainable freedom.
Now you know the 7 smart reasons why waiting is often the most expensive gamble you can make. You've seen the math that favors filing early. You know the hidden costs of the spousal theft and the danger of the tax time warp. You have the knowledge to protect your family's future. But what is the most valuable benefit you can collect? It isn't a dollar amount. It isn't a bigger check at 70. The most valuable benefit you can collect is time. Retirement has 3 phases: go-go, slow-go, and no-go. The go-go years, your early to mid-60s, are when you have the health, the energy and the clarity to actually travel, explore hobbies, and be active. Filing early gives you more cash while you can fully enjoy it. This is the youth of your retirement. Ask yourself this simple, critical question. Would you prefer claiming bigger checks later on, when you can't even enjoy them? Or would you rather enjoy it now when you have the energy to do so? Retirement isn't a contest to see who can delay the longest. It's about building a life you actually want to live. It's about building a life filled with time, health, and experiences you won't trade for another year chained to the grind. The truth is, money is just a tool. What really matters is how you use that money to buy freedom, peace of mind, and meaningful years while you still have the energy to enjoy them. Ask yourself, are you chasing a bigger number, or are you chasing a better life? Because knowing the difference could mean the gap between 10 more years of stress and 10 more years of living on your own terms. That's the mindset of the unretired. Not just adding years to your life, but adding life to your years. Your retirement isn't just about a bigger number. It's about building a better life. You have the knowledge now to escape the $48,000 lie and the gamble with your health. I want to invite you to join our community, because you don't have to fight the system alone. This journey is about more than just your money. It's about your peace of mind. If you're ready to stop worrying and start planning, click the link in the description below to learn more about a solid plan that's right for you. And if this video brought you a new insight, do me a favor. Like this video, subscribe to XRP Today USA, and share it with someone you care about. Because a legacy isn't built in silence. It's built on a foundation of trust and action. I'll see you in the next one.